Tesla shares falling almost 6% yesterday. Year to date, the stock's down 43%. Had a big gain, though. The company reports first quarter results after the bell today. Joining us now is Dan Levy, Barclays senior equity research analyst. You've got your price target down to more closer to where the stock is, obviously, Dan. Would you say that it's sold out here? Do you think it's closer to where you want to buy it than where you want to sell it, at least?
I think on a near-term basis, there is some opportunity, and specifically, there's a catalyst opportunity around the earnings call. You know, we're looking for the potential for Elon Musk to be a bit more re-engaged with Tesla, the opportunity to reiterate the FSD driverless event in June. This outweighs some of the fundamental factors that we expect for a weaker, earnings result itself. Beyond that, though, I think there are different considerations that still keep us equal weight on the stock as far as the volume and fundamental setup as well. But near term, there's a catalyst opportunity.
Heretofore, you were not expecting a 2025 decline in volume, and now that's your forecast?
Correct. And I think we had such a weak first quarter. There's going to be a weak setup for the second quarter as well. And it's just too steep a hill to climb. Now, what we learned in recent days is that there was a report that the affordable model, which was supposed to be planned for the second half and which was supposed to be an opportunity for volume, that's going to be delayed by at least several months. And then you have all the questions on brand damage and where we are in the global EV market.
There's a couple of ways, I guess, that you might see that dissipating, the brand damage. He steps away from Doge, let's say, and so that takes that off the table. There's obviously some lasting effects, but you know how fickle some consumers are. They see something really neat or a cheap Tesla or FSD feature. I think that could be, I don't know what the half-life on the brand damage is. All I know is that there's certain places where I live where I park in a parking lot and it's like, there's like 8 Teslas and then there's a space for me. It's mind-boggling. When people buy an EV, they buy it many times. They buy a Tesla, and is that going to change?
Look, I think as far as leadership in the EV market, Tesla is clearly there. The opportunity for Tesla is they're really the only ones, at least in the U.S., that figured out how to sell EVs profitably. Everyone else has suffered with a lot of losses. So I think Tesla has an opportunity to continue to lead the market. I think it remains to be seen on the brand damage side, but I think you're right. I think we've seen over, the history of sort of market share dynamics for autos. Market shares will swing around, and I think, the thing to keep in mind is Teslas are actually relatively affordable. The $7,500 credit, which we expect to go away, is actually still in place, and that makes a Tesla today one of the more affordable vehicles in the market, especially if you're leasing it. What
would be a huge negative that could come out that we're not anticipating today? Maybe you could give me a huge positive. We've talked about the positives, but is there anything that could be way below what the street was expecting?
Well, I think that the question is really around the pace of recovery of margins. Margins have been under pressure for a variety of reasons. Discounting and costs and the volumes have pulled back. If they give any color that shows that the margins are going to remain suppressed, that's a problem. Just remember, we're forecasting margins of roughly 10% this quarter, automotive gross margins. That's 1/3 of where we were 3 years ago. We've seen massive margin compression the last few years. And I think if we're still sitting here looking at a limited margin opportunity, that's a clear negative.